Now, without further delay, let's begin today's event, sponsored by Moxie and hosted by American Banker. I'd like to introduce your moderator for today, and that is Mike Sisk. Mike, you have the floor.
Thanks very much, Adam, and I would like to welcome the audience. Once again, we are very grateful that you've chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with what I am confident will be an engaging 60 minutes or so of discussion. Once again, our topic today is 2020 Digital Engagement Essentials for Financial Services. And my name is Mike Sisk. I'm a contributing editor at American Banker, and my articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy and Business, and Worth. And I am very pleased to introduce our three speakers today. Jeffrey Williams. Jeffrey is a senior analyst serving financial services digital strategy professionals, helping them evaluate the implications of digital innovation on their businesses. His research focuses on the intersection of secular trends and technological advancements, such as the Internet of Things and sensors, artificial intelligence and machine learning, and natural language processing, as these advancements are changing the way financial services firms do business and interact with their customers. And we're very pleased to have Jeffrey here with us today. And joining him is Dean Davison. Dean is a Forrester Principal Consultant who serves B2B marketing professionals. He has extensive experience in the buy side of technology, advising customers in purchasing and implementing solutions, including interacting with CIOs on 6 continents. His experience also includes sell-side work in sales-focused marketing functions such as pricing strategy, competitive intelligence, product marketing, customer insights, and market analysis. Dean is a thought leader in sales enablement, helping technology vendors adapt their marketing programs, focus on a customer's business outcomes rather than product features or functions. And also very happy to have Dean with us here today. And rounding things out is Brian Strauss. Brian is Moxie's VP of Worldwide Field Engineering. He has 20 years of experience in sales engineering, web development, and product marketing. A true solutions engineer, his mission is helping brands build a guided digital experience with Moxie. And a great panel here, and that's looking forward to hearing from all three gentlemen today. Just before we jump into the real meat of the discussion here, I wanted to reiterate 2 things that Adam mentioned at the top, and that is, one is that we've got time at the end for Q&A. We usually have about 10 or 15 minutes set aside for that. You can put your question into the queue throughout the hour as it occurs to you. You don't have to wait until the end, so please get those questions. If for some reason you ask a question that we don't get to, sometimes we just run out of time. Sometimes it's just a question that's better answered one-on-one. But if for whatever reason we don't get to a question you've asked today, we will follow up afterward. So your voice will be heard. So please ask away. We very much want to hear from you. And we also have, I believe, 2 polls today, and I always encourage 100% participation. We share the results live with everyone here, so it's a nice way for everyone on the program with us here to see where other folks stand on the issue that we're here to discuss. So if you weigh in on those, that would be most excellent. And I think that brings me to the end of my little opening spiel here. I will be back in a little bit to help out with those polls, but right now I would like to officially turn things over to Jeffrey to get the ball rolling. Jeffrey, the floor is yours.
All right. Thanks so much for that intro, Mike. I think we have some very interesting research to provide you guys to set the stage for our discussion on contextual guidance. So with that, let's go ahead and get moving here. So what you'll take away from today's presentation, there are a few things I want to talk to you guys about. I want to give you some context on how financial services industry is performing in regards to customer expectations. I'll move on and then provide some context and some statistics that I think you guys are going to find enlightening to show you a bit more about how customers are actually utilizing digital and engaging with you as their service providers. And then lastly, we'll conclude with a few thoughts on contextual guidance and how all of this fits into helping you elevate your customer experiences. So with that, let's start talking a little bit about a really good framework that Forrester has put in the market, the CX Index. So with the rapid advancement of digital technology, which is ushering in new ways to sell, buy, and administer and service financial services products like insurance, new entrants are coming to market with digital-first operating models, which are challenging the status quo. Furthermore, empowered customers expect to transact with their service providers, seamlessly, regardless of the touch point they utilize. To maintain competitiveness and succeed at elevating CX, you must reinvent your companies to become fundamentally digital throughout the customer journey. So Forrester, we've created research that shows that delivering good customer experience is good for a company. To help clients evaluate CX, we developed our CX index metric, which is comprised of 6 elements, which you can see to the right bottom of the screen. The first, effectiveness. Does the experience deliver value to the customer? Second is ease. How simple is it to get value from the experience? Third is emotion. Does the customer feel good about the experience? 4 is retention. What's the likelihood of this customer keeping business with you? 5, enrichment. Is it likely the customer will buy additional products and services? And finally, 6, advocacy. The likelihood that the customer will refer you to others. So once we review the results and compile our analysis, we assign a score and sort each company into 5 baskets, as you can see illustrated to the left side of this slide. What we have found from our research is that improving CX yields economic benefits that get the attention of C-level executives and shareholders. 3 economic benefits include: 1, faster revenue growth. Customers who have a better experience are more likely to stay with you, buy additional products and services from you, and recommend you to friends. The result, more retained revenue from reduced customer churn, more revenue per customer, and more new customers. The second benefit is higher margins. When we analyzed our data from the CX Index, we found that customers who have a superior CX are willing to pay a higher price for products and services. This is particularly true for customers who rate experience as outstanding. And finally, the third economic benefit is lower costs. When frustrated customers contact companies to resolve their problems, they run up the company's service costs. So logically, getting CX right can lead to less frustrated customers and lower service costs. Based on our index, financial services companies have done a mostly okay job at delivering customer experience, with multi-channel and direct banks outperforming insurers and wealth managers generally. But doing an okay job will not defend against increasing competition and fintech and insurtech innovators. As such, financial services firms must continue to invest in solutions and capabilities that elevate CX. So we know that leaders in our CX index benefited from higher revenues and lower costs. Here I present a fascinating tidbit of data and analysis that is specific to insurers. I collected advertising spending data and net premiums written data from U.S. statutory filings to create what I call the net premium written to advertising spending factor. The math and components in the factor are net premium written growth divided by advertising spending margin, the margin being calculated as advertising spending as a percentage of net premiums written. The factor denotes advertising effectiveness as it measures how much growth an insurer is experiencing from its investments in advertising. And doing the math, the top 5 insurers in our auto and home CX index experienced a factor much stronger than the bottom 5 insurers and much stronger than the broader industry. So what does it mean? It means that insurers that focus heavily on CX can spend less on advertising to drive growth. They can allocate capital to other projects to elevate CX and spur that growth. So now we're going to proceed into the second part of this presentation. So I gave you some context on the importance of CX. Now I'm going to talk a little bit about trends that we're seeing in the market as it relates to your customers. So in short, the financial services marketplace is in need of a CX jolt. Finding ways to simplify your customer's buying journey is a great start. Remember these 2 points. 1, your customers want to quickly find the products and services they need. And 2, they expect seamless omni-channel experiences. Before moving on in this presentation, let me set the stage as to what you'll see in the next 7 slides. In addition to our proprietary CX index evaluation tool, Forrester also surveys customers to help our clients get a view of their customers' expectations. In the next few slides, I will share a few of the survey questions and responses with you to tell a compelling story on why optimizing your digital touchpoints matters. For efficiency, we will use auto insurance as a proxy for trends throughout financial services, with the understanding that consumer expectations may vary by financial services products. So there are a multitude of customers in the financial services marketplace at any given moment. We asked customers if they had an existing relationship with their financial services provider before they opened their auto policy. Most said no, which signals that the market for customers is large, particularly for products like auto insurance, where price is an important factor. Customers are looking for excellence, and they expect to quickly get the product they need at an affordable price. For financial services products like life and health and savings and loans, investment returns are also very important. But the point is that customers are out there, and although important to some, most don't rely solely on the existing relationships they have with their service providers. Prospective customers use a variety of mechanisms to search for financial services products. We asked customers what resources they use to research auto insurance. Most indicated that insurance providers' websites are most helpful, but search engine results and comparison review websites are equally important as well. Prospective customers are using a variety of tools to get information they need, such as blogs, social media, but just because the resources are available doesn't mean that they will provide the best information. Financial services companies should invest in capabilities that allow customers to quickly get the information they need and ensure customers can navigate digital touchpoints with confidence. Financial services is highly complex, given the actuarial aspects of pricing and the heavily regulated marketplace. As such, many customers use agents to get the information they need to feel confident in their buying journey. So we ask customers to indicate how strongly they agree or disagree with statements about their agents. Many strongly agreed that agents are helpful in their buying journeys. I believe that agents are important in the journey because they do give customers a sense of security in terms of how they're going about evaluating the coverages. But tomorrow's customers who are empowered demand seamless omni-channel experiences. And agents are great, but some customers don't want to deal with them. We ask customers if they have purchased the insurance products they own through agents, and many indicated that they sometimes use agents or they don't use them at all. So digital channels and their direct-to-consumer attributes are highly appealing to this customer group, but they want to feel as confident with their purchases as those using agents or advisors. And many customers get frustrated with the application process. We asked customers how strongly they disagreed with various statements when opening an auto policy. Nearly 40% said that or indicated that they were frustrated, and a great percentage more indicated that the application process was more difficult than they expected. These are your prospective and current customers, and their frustrations will translate into lost opportunity. InsurTech innovation is all around you, and these are the types of circumstances that many of the sexy names like Lemonade Insurance and Root Insurance feed on. And it's not just about the application process. Your customers believe that account features can be tricky too. We asked customers which things they thought were most challenging about opening their auto insurance policies. Many indicated understanding the fees and features as being key issues. A large number also indicated that finding information they needed was a challenge. Again, these issues can lead to frustration and lost revenue. So your customers get frustrated with the application process, and they don't understand product and fees and features. So what else? How about account features? Yes, your customers are also experiencing challenges here as well. We asked customers to rate various experiences post-opening their auto policy, and many indicated that setting up online accounts and account alerts are also difficult undertakings. So what does this all mean? Well, your customers want to engage with you with the touch point they want when they want to. Financial services products are complex, and agents are effective in your customer's buying journey, but not all customers use agents. Helping your customers effectively navigate your digital touch points will be a means to elevating digital customer experiences. Optimizing your web and mobile touch points with contextual guidance capabilities will be a means to elevating CX and helping to drive revenue growth and margin expansion. Before we move on to Dean, I would love to know where you guys are in your contextual guidance journeys. So, Mike, can you put up that poll question, please?
Definitely. Thanks, Jeff. And everyone, as promised, here is the first of our poll questions. How mature is your contextual guidance strategy? And I'll just read through these three possible answers here, and while I'm doing that, I suspect that will give everyone enough time to answer the question. So again, how mature is your contextual guidance strategy? I am contextually guiding customers today, or I plan to contextually guide customers in the near future, or I have no plans to contextually guide customers. Another moment or two. Okay, that's probably enough time. Let me go ahead and share here. So, all right. 57.8 said, I plan to contextually guide customers in the near future. And then kind of split. The remainder was sort of split between those that are guiding customers today and those that do not have plans to do so. So thank you for that. And Jeffrey, let me just ask you, are those sort of the results that you kind of expected to see, or was there a little surprise here?
You know, I would say this is what I somewhat expected. I know that for a lot of companies, we're still early days in terms of their journeys into this type of guidance technology. For the most part, this split looks about equal to what we're seeing in the marketplace through our surveys as well. So nothing surprising jumping off here. And I would say it's a great positive to see that most of the survey respondents here are indicating that they either are already doing this or plan to do this in the near future, because I do think it's going to be a big part of helping to elevate CX, particularly as more empowered customers are looking to use digital channels more so in the future than they aren't. Helping them through these types of technologies is definitely going to be a positive, net positive for the financial services industry ahead. So the results look great to me. And that, I'll pass it on to Dean. So, Dean, batter up.
Thank you so much, Jeffrey and Mike, and those are some very interesting results. What we're going to do now is talk a little bit about some of the experiences of those companies that are in that 20 to 25% range who are already using contextual guidance. What Forrester Consulting did was we conducted a total economic impact analysis. I'm going to explain what that is and give you a little context for how we do that. But first of all, I want to say this is an actual case study. This is based on companies we interviewed, and this is the results put into a financial model of the activities they engaged in and the results they achieved and the impact on their ultimate customer retention and other activities. I do want to emphasize that this presentation is a summary. It is an abbreviated presentation of a very comprehensive study that you can download from Moxie, titled The Total Economic Impact of Moxie KBOT. In that study, we show all of the assumptions, we show all of the calculations, and we try to do so in a way that allows you or gives you a tool to apply it to your situation and your circumstances. So without further ado, let me go ahead and talk to you a little bit about what that is. First of all, we look at hard benefits and costs and soft benefits and costs. Most organizations will define hard benefits or costs as those that actually trickle down to a financial statement. So you saved actual cash that led to increased profitability, or you had to spend money that reduced profitability. Soft benefits and costs are those that may be that still impact the organization but don't necessarily show up on a financial statement, such as the productivity of employees or time spent doing certain functions. And so it still makes an impact on the organization, and it may indirectly impact your financial statements, but not directly. We also look at flexibility, which is forward-looking down the road. What types of benefits and capabilities does a particular solution like Moxie KBot enable that you may not be thinking about today, but will show benefit years in the future? And then we risk adjust all of that to reduce it down to a return on investment that we call the total economic impact. We have a very structured process for doing this, and this methodology has been around, and it has evolved, but it's been around for more than 2 decades, of where we go out and we do some due diligence. We talk with people like Jeffrey. We talk with people at Moxie. We talk with other people in the industry. We develop a hypothesis and a framework, and then we go out and interview those customers, and we build the rest of the story based on what those customers told us. And so that's where we get to today. So as we go into this, and as we began and we boiled down all of these observations, you start to see some messages that are very similar to the things that Jeffrey just talked about. That before engaging with KBOT and using it for contextual guidance, the customers used all sorts of in-house development teams to build websites, to build interfaces, and other types of capabilities that would improve the customer experience. The lead time on these was extensive, it was expensive, and sometimes it was cumbersome to get those through the IT organization. The result is that what they found out was a lot of the companies struggled to be able to get solutions out quickly enough, to be able to react to competitive pressures or regulatory requirements, and resulted in high volume, but also high abandonment rates and a lot of return or cancellation costs from customers. After using contextual guidance from Moxie, the organizations basically found 3 distinct benefits. One is they had a measurable improvement in the conversion rates of new customers. In fact, we measured 6% higher on average across these organizations. In addition to higher conversion rates, there was a reduced volume of contacts and customers coming back with questions after the fact. So there was a lower burden on call centers and follow-up materials that customers were looking for. And, of course, that resulted in lower cancellation rates. And overall, using contextual guidance and Moxie KBot really accelerated the ability of these companies to implement new digital solutions and engage with customers in superior ways. Overall, the financial analysis that we found, it was a rather remarkable 700% return on investment for these companies using Moxie KBot, and a payback period that was less than 3 months. So how did we get to that number? First of all, what Forrester did, we went and interviewed 4 distinct Moxie customers. Now, these customers were introduced to Forrester by Moxie, but after that introduction, Moxie no longer participated in the interviews, and so these were completely frank and honest of these companies directly with Forrester. As you can see, there's some distinct types of companies. There's a couple of them that are in the retail or e-commerce space, and 2 of them were in financial services. Today, we want to focus on those that were in financial services. But as I go through the model, I just want you to know that some of the input that is in the financial calculations at the high level include some of these non-financial services representatives. And so as you begin to look at the comprehensive study and adapt it to your own circumstances, make sure you take that into account and convert the language. For example, look at, for example, you may have an e-commerce organization or a retail organization that talks about average order value or something like that. And you can begin to ask yourself, well, how would that convert over to the lifetime value of a customer? How would a conversion rate in retail relate to a customer going through a much more cumbersome and complicated process in financial services and actually reducing abandonment rates? So that kind of adaptation will be helpful, but all of this information was applicable, and what we found is that the experience that all 4 of those organizations had was very similar, even though they came from different industries and had different business models. So in this sheet, what we really want to do is go a little bit deeper to what I talked about. What was the experience that these customers had? What was their journey? And on the left are the key drivers. And that basically is what problems or challenges were they having before they engaged with Moxie. And we put that up there under the assumption that no organization wakes up and says, hey, I want to spend my money. I think I'll go buy something. that every organization has funding, budget, and it invests that money to solve a problem or to achieve an objective or to do something differently than it has previously been doing. The three main drivers that came out across these interviews was, again, confusion for consumers along the path to purchase. And that was especially pronounced in the financial services. And we're going to dig into that a little bit later on. I've got some great quotes for you that came out of these interviews. An inefficient way of contacting customers. Today, using call centers is a very expensive alternative. And yet, given all the challenges and the regulations that exist within the financial services industry, that's still often one that financial services companies default to. And Moxie actually can help reduce that as a back-end cost of customer support and customer retention. And then the last problem that they were all dealing with, these organizations, and what they told Forrester, is that they had this lengthy and an expensive internal development process. Again, the web development, the controls, the flows, working through the IT organization. And so as they started looking for a solution, now I'm moving to the middle column, they were really looking for something that didn't require the technical team to be as involved as much, that the business people themselves could largely implement and manage and deal with. And so along that way, they were looking for something that would both enhance the customer experience and customer conversion rate and reduce the cost of maintaining that customer relationship. In this case, all of the four companies obviously chose Moxie and the KBOT product for contextual guidance, and they began to build that guidance in a way that anticipated the customer's problem and could guide the customer based on what they were trying to accomplish. As a result, all of the companies that we interviewed found an improvement, a reduced cost, if you will, in their contact center. So usually measured by a lower or reduction in the number of calls coming in. In addition, they increased the level of customer acquisition, elevating profits, and overall improving lifetime value of a customer. And then, of course, they had more rapid development, largely because KBOT does not require the involvement of the IT organization and can be implemented and managed largely by the business team themselves without going through certainly development or other types of more time-consuming and laborious IT functions. So let's take a minute now and look at another poll. And Mike, let me turn this back to you for looking at how these types of problems apply to the people who are on this call.
Excellent. Thank you, Dean. And yes, everyone, our second of two polls as promised, and the same drill as before. I'll just read through the question and the answers, and I think that'll give everyone enough time to make their selection. So question is, what of these is the most important to you? Is it increasing customer acquisition, reducing unnecessary contacts with customer service, or limiting dependency on IT? Gotta choose one of these three. The most important. All three might be on your mind, but we want to hear what's top of your mind. Moment or two. Back to Dean. On our way for the second of the. Okay, so that's probably enough time. Let me go ahead and share here. And okay, so pretty clear finding here. Increasing customer acquisition, 67.1%, followed by reducing necessary contacts with customer service, about 25%, then limiting dependency on IT services, about 7.1% there. So interesting, pretty definitive results there, Dean. What do you think of those results?
Mike, I love them. As we look and as we broaden the discussion from contextual guidance and we talk about digital transformation as a whole, and I was on a call yesterday where someone said, well, the phrase digital transformation has largely become like saying, let's be green. It's become so generic that it means just about everything or it can mean absolutely nothing. In this case, though, digital transformation for most companies is largely about changing the customer experience. And the back-end costs and cost savings and the efficiency become secondary as enablers to changing that customer experience. And so it jumps out increasing customer acquisition and that business objective is the driver for 2/3 of the organizations who will be motivated by that. To be perfectly transparent, those of us who are presenting and supporting this call, we were curious about this. We were having a little bit of a debate before the webinar started about how we expected the responses to come in on this. And I'll be honest, I expected, I think the general consensus was that customer acquisition would be number one. Personally, I expected the reduced level of contact center support to be a little bit higher than it is, but that's just me. I just thought it would be very transparent. I probably lost a bet or something over that. But with that, let's jump on forward and talk about what Forrester found in these interviews. Because what these companies found using KBOT for contextual guidance is exactly what most of you are trying to achieve. And here's a quote from one of the marketing leads in a financial services firm. We've seen our online completion rates increase dramatically over the year. The more engagement with KBOT during the online process, the better. And as we conducted these interviews and we listened to these executives share their experience, what we really found was that they were able to anticipate common problems, misunderstandings, confusion, especially in financial services and banking and insurance, where there's a lot of assumptions. And we're going to talk about what some of those are as we work through the presentation, but helping people understand what is the right level of coverage that they should have. Helping people understand, and we'll talk about this in a few minutes, that a student is not the same as being unemployed. Helping people understand how a product can solve or how it fits or how maybe it doesn't fit their need in the financial services industry has been just proven to be a very powerful tool, and I think the results of our analysis really bring that forward. What I want to do now is jump into the details of how we did this financial analysis. Now, I'm going to gloss over this fairly rapidly, but this is where the details in that comprehensive study will be most valuable to you. We should, for every one of these 5 categories of benefits that I'm going to show you, in the study itself, in the comprehensive study, there's a table. The table shows every assumption, every bit of math. It shows the calculations. It shows the risk adjustments. So I would strongly encourage you to get that from Moxie and go back and apply it to your situation. To do that, though, because we interviewed 4 distinct organizations, we build what we call a composite organization. That's really a fancy phrase for a set of assumptions, an assumed organization, because we can't build 4 simultaneous business models and present them. So we take these 4 different organizations and we say, based on who we interviewed and the experiences they had, we're going to draw a composite set of assumptions, and then we'll build the financial model around that. So we assumed an organization that was $500 million to $1 billion in annual revenue. It had 5,000 employees. It had about 54 million visitors to its website, including mobile apps. It previously had a 2% conversion rate, $150 order value, and there's a place where the order value would need to be converted over to a lifetime value of a customer or revenue in the first year, however it is that you and your business calculate that. And that it had about a 10% year-over-year increase in the number of visitors that it was experiencing. As you compare your business to that composite set of assumptions, you need to adapt and adjust. Maybe you're a $4 billion organization. Maybe you're a $100 million organization. Scale and adapt these assumptions to meet the specifications and use the study as a framework to determine what would be the return on investment for your company. Now, that being said, the 5 benefits that we really rolled out, the first 3, 1, 2, and 3, really relate to the business process. They really relate to that customer conversion rate and engaging customers. So we're looking at increased conversion rates. We're looking at savings from a reduction in returns or cancellations in the first in the early period, or we're looking at the profit from related to the lifetime value of a customer. And so those first 3 are all about how you're engaging with customers and what you're achieving from them. The last 2 are about the efficiencies in-house. One is about the reduced cost of maintaining a contact center or a call center, which is supporting those customers. And then the last one is avoided costs of internal development. So let's walk through each of these in just a little bit of detail. The first one, the increased conversion rate. Again, as I've mentioned earlier, the increase in conversion went from 2% to 8% for these organizations. And so as we start to do the math on that over several years, as we look at just that increased conversion rate, without changing any of the other marketing and other activities, we see a benefit that's worth almost $4 million in profit over 3 years. And by the way, I should add our analysis is conducted over a 3-year period. The second one then, as we start to look in the cost savings, is reducing returns. Now, obviously, if you're in the retail business, a return is like we all do. Sometimes we order something and we don't want it, so we return it. But in the financial services, it could be accounts that are opened and never used, cancellations. I've even talked with one financial services company not too long ago that had a significant gap between the time someone would apply for a loan and because they had this lengthy period for approval, that by the time the loan was approved, the customer didn't want it anymore. So there was this fallout or abandonment rate. And I'm sure that hopefully that applies to some of the situations that you're having. But again, just this process of canceling a certain number of these orders, of looking at that lifetime value, of looking at the customers that actually, from the time they apply to the time they actually become customers on the books and you can make money from them, was more than $2.5 million in reduced costs for these organizations. Now, some of this comes because, again, contextual guidance is anticipating the buyer's problems. One of the examples I alluded to a few minutes ago in a quote was from one of the insurance companies who said, some drop-down menus are confusing. Options for employment were confusing to, in this case, their customers. Students would often select unemployed instead of student, which resulted in a no quote or an excessive price. And they use that just as one example to show how it just reduces the confusion and the uncertainty that buyers sometimes struggle with because they don't buy insurance every day. They don't necessarily go open new bank accounts every day. And so some of the questions you ask maybe are riddled with jargon from the industry, or they have certain language in them that is required by regulators. And KBOT helps you smooth that out and educate the buyer along the way to things that are often sources of confusion or ambiguity for readers. As we start to look at then at a couple more categories of benefits, we start to look at this profit growth from a lifetime value of new customers. And again, every year, if you're able to convert 6% more customers instead of 2%, now you're converting 8%. You start to expand that over, and in this case, we did over 4 years. You start to get increased profit. There's increased value, there's increased revenue, or profitability from them, depending on your business. And the benefit that we calculated there was almost exactly $1.7 million over 3 years. The fourth one is the one about reduced cost of a call center, and I'm just going to go through this one pretty quickly. Basically, fewer calls meant less money. Fewer call center technicians, fewer people that needed to handle calls, and even using what some people might describe KBOT and contextual guidance as a way to enhance the self-help capabilities that you might have on a website. But basically, you're reducing the cost of maintaining call centers and customer support, which is an expensive thing for all of us. And that value was almost $650,000. One of the interviewees in an insurance company said, people would answer it incorrectly and get stuck. And if they answered it incorrectly, they would have to call. They could not go back because they could not go back in the middle of the application because of fraud rules that prevented them from changing their answers. So again, just an example of an insurance company who found a very specific use case for KBOT, because in their industry they couldn't allow people to go back and change an answer. The last benefit, the fifth one that we wanted to talk about, was the avoided cost of internal development time. Basically, you didn't need to have some of the developers doing work that they would have otherwise had to do. Or they were able to focus their effort on other activities of the business, not regarded to contextual guidance or necessarily solving the same problems on either your app or your websites that support customers. And we found by avoiding the need for 2 full-time equivalent developers, for the better part of 2 years, equated, for 2 people for a year, over 3 years, reached about $423,000 in cost savings. Now, those were the 5 benefit areas that we really wanted to highlight. And again, an example, what we also saw was when people would choose a very low limit of personal belongings, we would educate them about the average values when adding it up. We saw that the number was of really low coverage selections dropped off almost completely. And so, again, just a way to help people understand, because they don't buy insurance every day. And some people, especially younger people, don't have the experience to know what it costs to replace a house when it burns down, and all of the possessions inside of it. Now, in addition to those 5 benefit areas, in the last couple of minutes, I wanted to share some additional benefits that these customers told Forrester about. In this case, we weren't able to put a value on them, either because they were too early, too nascent in their development to be able to really ascribe a specific dollar value to, or in some cases, they just simply didn't have the data because it was a little too amorphous. But they're things that they recognized and identified in their organization. One was the ease of implementation. These organizations talked about being able to implement this in a matter of weeks. Building all of the contextual guidance sometimes takes a little longer, especially to anticipate different users and buyers and what situations they'll encounter. But the implementation itself was very straightforward. Increased customer satisfaction. Not only do you increase the customer conversion rate, but those customers are happier because they had a less painful experience becoming a customer. Improved employee satisfaction. And by the way, Jeffrey and I could get into a whole long conversation of something that's completely off topic for today about the relationship between customer sat and employee sat. And the diminished use of remarketing solutions, again, less abandonment, less need for remarketing or retargeting activities. So all of that now, of course, to do a calculated return on investment, there has to be a cost. In the model that we developed, there was nearly a $1.2 million cost. About 73% of that came from the cost of using the KBOT contextual guidance that was there, and but only about 4% of that, as you can see, was the cost of setup and configuration. There was an ongoing management cost that was about 23%. Again, you can see the complete cost data in the comprehensive study that we've put together. But all in all, that is the total economic impact of 701% of using Moxie KBOT. And with that, I want to introduce Brian, who's going to walk us through a little bit about what this looks like in the real world working with Moxie.
Well, thank you. Thank you, guys. I really, really appreciate that thorough presentation. And what I want to do today is kind of just talk a little bit about what this means in kind of a brass tacks or practical terms, and mean by anticipating customer hesitation or struggle points. What do we mean by contextual engagement? And so as we jump in here to the first slide, I really want to talk about this in the context of the hesitators and the strugglers. And they're not the same thing. And sometimes we use these things synonymously. And I want to talk about how contextual guidance and our platform allows you to address all these folks in kind of with one kind of set of techniques. So first of all, when it comes to contextual guidance, what we mean in anticipating the customer struggle points is it's a little bit like using Waze for the internet, right? When you're driving down the road and you're using Waze, you don't just use it to find out where you're going. You use it to kind of anticipate the problems up ahead. And one of the things to bring this home for you, what I mean by this sort of metaphor is, when there's an accident up ahead, Waze doesn't say, hey, let's chat to give you better directions. It doesn't say, hey, here's a chat bot to ask where you're going and I'll reroute you. It just reroutes you. And so I think one of the points that we do is we look at the real opportunity here. It's putting that bit of information in front of the customer that we think is going to be most helpful at that moment. And so let's talk a little bit about, some of those things. Sometimes it's just a tip, right? Saying, hey, this would be the most helpful. This is how you explain the difference between these products. And it's a combination of using that tip with our analytics that senses what they're doing and where they are in the journey. So both not what page they're on or what source they came from or what promotion they came from, but obviously where they are now and what buttons they're clicking on or what product they're looking at or what price point they're considering based on where they are, if they've clicked a radio button or something like that. And so being able to anticipate has a considerable benefit. So let's talk a little bit about the hesitators and the strugglers. So in addition to the fact, we talked a little bit about earlier in this presentation about the fact that customers have responded that they can't find information or they don't understand something, or they have urgency and they pivot to a higher cost channel. Those are really the strugglers. However, the hesitators are the people who aren't aware that they're struggling. And so a lot of our customers, when we started working with them, when they're trying to, within their customer acquisition flows, a lot of times they would tell us, well, we've already got a chatbot here. We've got tooltips. We've got chat. We've got email. We've got a phone number. And sometimes we have all of those on the same page, right? So the challenge, though, is that in many times when somebody's going through a flow, especially in financial services where there's a lot of onboarding to do, jargon isn't even easily understood, people just may hesitate without even being aware of it. Just not understanding something may just be enough to take their eyes off the screen. They might have gotten an email. Their kid may have come into the room. Who knows? YouTube might have gotten their attention, and that may just be enough to delay them. So hesitating, addressing the hesitators is to say, in those solutions where we know there are common abandonment points, or we know where people tend to ask a lot of questions, we want to prompt those people, and we want to cut through the jargon. We want to give them a tip. We even want to offer them a link to take them to the place that might help them out. And so it's both a question of sort of anticipating with that not just to give them the answer, but to give them an incentive or a nudge that will let them continue through the process, even when they don't always know why, why they received that. Also, then, the other thing is that traditionally, when we talk about the strugglers, right, or even the hesitators, traditionally what we've done is to employ live channels like chat, right, or the phone, which are really, really high cost, but we know that if we can be strategic, we can reap some top-end benefits by trying to apply those in a customer acquisition sense. The real challenge, though, is really not just the cost, which is exorbitant, but is also the reach issue. All of these things depend on a live agent being available, and you really can't make those live channels available to your to the vast majority of people. What we see is that live engagement reaches less than 1% of the people that are on a website at any given point. Whereas when you're using contextual guidance, which isn't dependent on the availability of a live agent, you can reach literally everybody. So it's another way to reach that very important 99%. Okay, so you can see in this example, what we're doing here is also providing next best action. And so this next best action is fantastic because even where the content, the exact functionality may be on the page already, right? As I mentioned before, the answer to maybe another thing that if I just scrolled down far enough or if I looked in the right place, it might be there. Sometimes when we're in these high kind of urgency situations, like we've lost a card or we're locked out of our account, we may panic and just go right to the highest cost channel. Whereas, and even in the shopping journey where I don't really understand the jargon, I can offer somebody with contextual guidance the next best action to take. Okay. All right. So, and moving forward, just to show you a couple of other examples, right? So here's another one that talks about, again, sort of a next best action scenario where you're encouraging someone to join up for a loyalty program, or you're trying to cross-sell or upsell them, being contextual and understanding that, hey, we have a product or a service that may apply to this particular person at this particular moment, like a multi-line discount, or it could be, some other kind of overdraft protection in a banking product, or you may get discounts on your mortgage if you sign up for a card. Those are all the other things that we find that we get a lot of carryover and bleed over. When people have a great experience in one line of business, it has big carryover in our ability to cross-sell and upsell those audiences. And so that being said, I want to also just talk a little bit about how this frees you up to use your live channels more judiciously. So while I was sort of on the one hand kind of criticizing the overuse of live channels from an economic standpoint and a reach standpoint, they still have their place. And the beauty of it is that when you use it more as an point of escalation, or you use it as a secondary way, or to use it to engage your customers, it can be a lot more powerful and a lot more cost effective. So, for example, you may have a couple of scenarios where you're just like, look, I really need to consult with people in certain use cases. Well, now you have the freedom to do it. And what this does, it changes the game, because typically when you're like, okay, I have chat, or I have the phone number on the page, or I have it somewhere, you tend to get an overwhelming majority of frequently asked questions or repetitive questions. If you're in a financial institution, chances are, I can't get into my account is anywhere from, 20 to 40% of all of your contacts. And we see that depending on the industry, that there's a few of those. There's a top 4 or 5 questions that tend to overwhelm the live channels. And what those do is they get in the way of the unique and consultative conversations that those channels are best for. And so what you can do in a situation where you're using a predominantly contextual guidance kind of way of engaging customers is certainly reach everybody in a far more cost-effective way, reach everybody. But then it frees you up to sort of jump in with chat at just the moments that you need to, like in this situation where we've been engaging customers, did with contextual guidance, and then we're now pivoting into a scenario where, this is really complex, and I want to, make myself available to chat with people. You have now a granular use case by use case way to decide when to employ your live channels for the greatest effect. Now, certainly there's a lot more to discuss here, and before I pass this back to Mike, I just want to pop up on the screen. There's a broader best practices conversation to be had with us, certainly, and if you're curious about that, I wanted to show a couple ways that you can get in touch with us. And with that, I'll pass it back to Mike. Thank you very much.
Excellent. Thank you, Brian. And yes, everyone, we've got about 5 minutes for a few questions, and now would be the moment to get something in the queue there if you'd like us to ask it or to follow up with you after the program. But we've got some good ones in here now, so let me just, I'm just going to jump in. And this question, I'm just going to toss this out here, gentlemen, and please just jump in. How is the CX index measured across the 6 dimensions? Is it through surveys administered or to prospects and customers?
Yeah, I'll answer that one. So the index is actually, like I said, it's aggregation of all customer surveys. So basically, what we do, we survey a list of each company that's covered in the index. We survey their, I guess maybe about 80 or 90 or maybe more than that of their customers, and then we assign an index score to each customer, and then that's averaged to get an index score for the company that's covered. So, for example, just giving an example here, just say that if Bank of America was covered in the index, we would survey a base of their customers and then assign a score to each one of Bank of America's customers, and then average that out to assign the score to Bank of America. So we get a much more accurate view of how each customer is experiencing that servicing with that particular bank, and then we can make certain judgments or assessments that can directly elevate that CX score in the event the company wants to find out more about how to do that. I think that answers the question.
Excellent. Thank you, Jeffrey. All right, good. Some more questions flowing in here. Can you share personas for hesitators and strugglers as discussed relative to slide number 44?
Slide 44.
44.
We throw that one back up on the screen for a moment.
Yeah.
Is that the key one? I'm not sure. Is that maybe
that's probably the wrong slide?
Yeah.
Well, why don't I could ask another question, and then the audience member could put the slide number in if they can review. I'm not sure.
If they know it, it may be hard to see, but
it might be hard for them to see. Okay, so let me just go ahead and ask, what metrics do you consider when developing and placing the KBOT modals pop-ups in digital space? In a digital space.
Repeat the beginning again, please.
Yes,
I'm sorry.
please. No problem. What metrics do you consider when developing and placing the KBOT modals pop-ups in a digital space?
Yeah, this is great. So it's kind of like, how do you get started? It's another way of saying how do you get started and where do you go? So I mean, what we certainly there's a broad set and then an industry set of best practices for where to get started and where to put these things. So meaning, types of engagements and strategies of engagements that we know work. But more scientifically or more data-driven ways of doing this is to sort of bring together two disparate organizations at a company to solve that. So what we typically will do is ask, first of all, where are your biggest points of abandonment? And those are usually pretty well known, right? You'll get anything from the pricing page, which is, that's everybody's big point, point of abandonment, or it could be some specifically difficult piece of information that they're required to gather, depending on the vertical or the product. So that's a great place to start. Is we want to start engaging on those places where they have a high degree of abandonment and or struggle. A lot of error messages and things like that also are good places for consideration. And then what we try to do is then walk over to the people who are either operating forms of customer feedback. So a lot of our customers operate things like voice of the customer tools that reach out and people get feedback where they're struggling or hesitating or confused. So we'll then pair that up, cross-reference that with what's going on in the call center. A lot of times you ask any call center agent and they'll tell you the top 3 things that customers have, challenges and questions that they tend to ask, and they probably will even know where they're coming from. So we'll be able to say, hey, listen, highest abandonment or biggest struggle is on these 2 pages, or 3 pages or 4 pages. What are the top 2 or 3 things that people will ask at those points, right? Not everybody asks questions, but some people do. And then we'll start there. And the beauty of a good contextual guidance solution is that you just need an educated guess to get started. Sometimes there are fears of the fact that maybe we're going to annoy people or spam people with these things, and we find that really doesn't bear out. And you're able to really, if you're contextual, even if it doesn't always apply, you're going to start getting feedback. It's not going to take anybody off the path. And you're going to get feedback in our solution that's going to tell you how well people are seeing this, if people are seeing this, if it's being effective. So it allows you to kind of iterate and optimize your way into success, right? So you start with an educated guess, you start getting data immediately, and we have a solution that allows, as we talked about earlier, that a business person can use to manipulate this. And what that means is they've got just a really simple way to edit the approaches, to edit the logic, and from there we just use the data to guide us to the next step. So it's really, we find is when I say bringing together 2 sources of information, usually the business analytics group and the customer service teams almost never interface or rarely interface, and so that bridge is really how we do that.
Excellent. Thank you. I think that's a excellent note to wind things up on. We are right at the top of the hour, and we always like to bring the programs in on time, knowing that everyone, or almost everyone, is probably running off to something else at the top of the hour. So let me go ahead and officially just thank Jeffrey, Dean, and Brian for a great hour of discussion here. Lots of really provocative content, and also wanted to thank everyone in the audience for being here, for participating in the polls, and for asking those questions. And just a reminder that, if we didn't get to a question that you asked today, and there were some in there that we didn't get to, we'll definitely follow up afterwards. So thank you for asking those questions, and you'll be hearing from us. And with that, I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.